Hello and welcome to this week's Euro Macro Update. In the short segment, we unpack the latest headwinds facing the euro, from renewed US trade threats to a policy pause by the European Central Bank. If you're tracking forex markets this week, you won't want to ignore. The euro started the week under pressure as trade tensions returned to the forefront. US President Donald Trump has warned of a 50% tariff on EU imports unless a deal is signed by July 9. While Britain, China, and Vietnam have secured preliminary agreements, the EU remains on the sidelines and the markets are getting nervous. Meanwhile, the ECB is widely expected to hold interest rates steady this month after 8 consecutive cuts since June 2024. Policymakers are signaling a pause, with inflation now hovering near the 2% target. At the Sintra Forum, ECB officials reiterated their data dependent stance, indicating that further easing would require a clear shock. Future markets reflect the shift. July rate cut odds have dropped to just 5%, and only one more 25 BPS move is priced in for 2025. German 2-year yields, sensitive to ECB expectation, slipped to 1.809%, holding within a tight range as markets await clarity. Eurozone bond yields also recovered after a brief scare. UK gilt turmoil, sparked by fiscal U-turns and political uncertainty, triggered a spillover into the European debt markets. But by week's end, on Friday, yields had stabilized and the Italy-Germany spread narrowed to around 90 BPS. As the countdown to Trump's tariff deadlines continues, markets are bracing for volatility. The euro remains trapped between solid eurozone fundamentals and global uncertainty. Unless the clouds over trade lift, the path higher for the euro may remain capped. Thank you and stay tuned for more updates.